Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour. As we get started here today, we want to remind you this is a sacred and appointed time.
The following takes place between 2 p.m. and 3 p.m.
And, of course, what do we have going on today? We're down 103 on the S&P cash. If the volumes are right, this is going to be one of the biggest down moves on one of the lightest volume days overall. For those folks that don't know it, I use the CBOE market volume summary that splits up the market 9 ways to Sunday. If you want the link to that, email me at path@tfnn.com and I'll send you the link. The reason I do that and the reason I put it in every newsletter that I issue is there's always an argument about what volume and where and everything else. And it pretty much settles whether we're up on a light or not volume. You can look at it in several ways. If you just look at the New York Stock Exchange volume itself, you may find that greatly distorted to the rest of the market. Only about 25% of NYSE listed stocks, the shares only trade maybe a fourth on that actual exchange. Most of them trade on ECNs and other stuff. So you can see some fairly light volume or very heavy volume on the NYSE, but not see it in the general market. The reason why is that as far as the NYSE, those are all deals made with a handshake on the floor. If you actually go to the New York Stock Exchange now, they really have to make sure that the camera is pointed a very specific way so it doesn't look like it's a ghost town. And, of course, probably some of the most valuable real estate in all of New York City. Eventually, I imagine they'll sell it. The rest of the trading goes on in New Jersey. The dirty little fact that not really much happens on that New York Stock Exchange floor anymore. So I like to see it. In fact, I can show it right here. I'll pop it up here. But anyway, the CBOE market share and why it can be somewhat interesting to get into the weeds on this. The answer is you have tape A and tape B and then tape C, and you actually put together tape B and C for the NASDAQ, and then you got the New York Stock Exchange on tape A. And this splits it to all the different ECNs and other exchanges that feed back into the main exchanges where these stocks are listed on the NASDAQ and the NYSE. But the Reader's Digest version is what you're looking for. And it is 20 minutes delayed, so I'll give you that. But it's if you look at it at the same time most every day, it's important. And, of course, you're really not going to see the volumes come in anywhere at the end of the day. They can be higher and sometimes a lot higher because the dark pools don't have to instantly report their volume either. They're supposed to do it within 30 minutes of the trade. And I think actually 5 minutes on some regulations, but more of a suggestion than a rule. And certainly I haven't seen anybody that has been taken to task or had to pay a dime to do it. So anyway, that is what I look for on the volume. And like I said, you can, if you want to dig out and figure out what tape A, tape B, and tape C is in every one of these exchanges, you can see exactly how the volume and where the trading actually occurs. But I do digress. Anyway, as I said, we're sitting here watching the NASDAQ, and it keeps on trying to break down below these lows. 3636 is the level. We've had a couple of attempts at it. We've got the third attempt. None of them have come anywhere close to getting the kind of volume that would blow out those lows compared to the previous lows at those levels. Let me go ahead and pull this up. As I said, I put it in every newsletter, so there is no argument as to what the volume was, at least from the CBOE. And this is what is in every one of them. I split it out into New York Stock Exchange, the Amex, the NASDAQ, and total volume. The probably one of the more important things, I was talking to Basil about it, I think, yesterday, was the Amex itself, because the only thing that really trades on that anymore are about 200 ETFs. They're the biggest ETFs that have been around for a while. 98% of them are not reverse ETFs, so you really don't have to look, and there's, I don't know, 250 or something. So you get a lot of volume in that one, but it is kind of a good indication of those folks that aren't trading individual stocks, but that are in ETFs and are in sectors. You get a lot of the volume in that. Of course, NASDAQ, of course, technology for the most part, and then you get to see the total volume. So yesterday, what do we have? 11.8 billion shares. The day before that, about 11.85 billion shares, 12 billion shares, 13.3 billion shares. So we've actually been going down. Today, if I look at the volume and compare it to other days, you're probably going to be under 11 billion shares today, unless something drastically changes before the end of the day. So I'm not a big fan of saying anything can happen. But if volume tracks as it is today, we're certainly not going to have the 13.35 billion shares we had on the 23rd. And we certainly aren't going to have the 18 billion shares. I think it was 18.5 billion shares where we made these lows before. And we're testing them now with significantly lighter volume. So that's my story, and I'm sticking to it. That's at least part of it. The things going on, as we said, first thing is the test of the 3636 on the S&P cash. What we're going to get to then is yesterday's reversal on the TLT, when I was so inappropriately and rudely interrupted from my daily show by that pesky hurricane. We can actually see on this one the retest that we got today, actually, and back up. What are we trading at now? 103 and something, 103.56. We got within 14 cents in a spike earlier today from the November 2nd, 2018 low. So it's been away for a while, but we did it on significantly lighter volume when we got into that candle yesterday and got a reversal. Today, we've got about 110 million shares compared to that 85 million shares. That means we're probably going to come back and retest this, but we've got enough of a bounce and a move that I think it may take a few weeks for us to come back and break through the TLT low. We'll be back in a minute.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Just a little bit of history repeating.
On this day in 1983, Microsoft releases its first software application, Microsoft Word 1.0, for use with MS-DOS compatible systems. And of course, probably one of the worst pieces of software ever released at the time. But there were two very different kind of ideals going on between Apple and Microsoft at the time. One was constant and never-ending improvement from Bill Gates. The other one was Steve Jobs, who decided that the correct path to run a business or tech business was that of an insurrectionist, one that of a revolutionary, and that is that you shouldn't do incrementalism. It should all be at once. Bill Gates actually very much influenced by the turnaround in Japan, and he saw that. And he kind of liked that one. And, of course, Steve Jobs, the one that decided that it was all or nothing. We're either going to be victorious or die kind of attitude. Very interesting to see both the way that those companies went. Generally, for large companies, it's much easier to do incrementalism because of your investors. Steve Jobs, of course, got forced out. He wanted to do the exact same thing as Microsoft, and that is license the operating system and not get into the hardware where the margins were significantly lower. And because everybody knew that that would hurt for a year or two, would have nothing to do with it, and promptly forced him out. Of course, he'd be gone almost 11 or 12 years exactly. Remember, he came back on the same date he was fired. But very interesting to see how different avenues eventually let both companies become successful. On this day in 1983. Okay. I didn't see that. I don't know what. Okay. Next. Just got back to my desk, missed your intro. Yep. I don't see the kind of volume everybody else does. Doesn't mean we can't go lower. But I wanted to get back to Apple, which I thought was one of a bigger cautionary tale. At the high back here on August 19th, I talked about how I thought it was absolutely, they were full of it, coming out with upgrades and everything in the world, telling everybody how Apple was going to the moon. There were some other things going on there. I voiced my opinion that I thought it was all bovine excrement. It turned around literally the next day that we have everybody and their dog on Wall Street telling everybody it's time to sell Apple. They drove the indexes up on that on the 19th, and now they're trying to drive them down with talk of the end of the world for Apple. I am highly dubious for the second time in less than 2 weeks. So we shall see. Anyway, we're doing, for those that just joined us, we're doing about 7 billion shares. I'm looking for 18 billion to blow through there. Now, you can just sit at these lows and chew away and chew away and chew away at them and blow through them. So we've had 3 times. What we haven't had is the kind of single volume that can blow through the lows. Okay, other things going on here. Certainly is just sideways action on gold. I don't see a lot to say anything other than that. Let's go back and do this. Okay, and just kind of on the GLD, you're just kind of hanging out here. Volume is not intense, but it is not there. If we break any lower, the next low is 136.12. I don't see much going on here at the moment. We do get any kind of next move down, though. That is probably where it's headed. 136.12 would be the March 20th, 2020 low. But I don't see it now, but that could change. Of course, the SMHs are getting slaughtered today, which is interesting. After the bell tonight, we have Micron. We'll look at that next. On the SMHs, you had 21 million shares yesterday. Today you got 15.6 million shares going into an 18 million share low back from July 8th. So we could have the volume we need there. Let's take a quick look at Microsoft SMH. But it certainly looks like all the bad news is hitting the press. Why did I not do that? MSFT. Did I not do that correctly? Okay, there we go. Microsoft had 184 million shares. 147 on the 16th, 147th on the 23rd, and less than 100 today. So what you would want for a buy signal back on Apple is you'd need a close back above 241. So that is one of them. Had a lot of people ask me about Netflix. Wasn't exactly sure why. Maybe somebody's thinks it's got a good pattern or something out here. I'm thinking it's just a bounce and a downtrend. You haven't really retested the 162.71 in this one, and I would want it to do that, as we've got so many other stocks out there retesting lows. You really just kind of came about halfway up in this giant bar down, and not much other than that. But is there any big signals one way or the other? No. But that whole sector is having problems. Disney, who relies on its movies to actually sell a great deal of toys, there's been a lot of news in the last couple of days about just how bad, since their movies all tanked over the summer, that they're not going to have the sales this fall for Buzz Lightyear and a lot of the other things that go to kids. Most people, when they look at Star Wars and remember it, kind of don't remember that the movie almost didn't get made. And the way that it did get made was George Lucas sold all the rights for the film rights for money coming back. I think he made $200,000 or something for the movie, for directing it. But he got all the rights for merchandising and future movies, a piece of the future movies if there were follow-ons. And, of course, he'd already always planned to make follow-ons. And that really became the merchandising of movies. Is the volume horrible today in Walt Disney? No. But I don't see a lot out here that says that, that the theme park business is going to hold up the rest of the business, which isn't looking very good either in the streaming part. We'll talk about that when we return.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Had somebody ask. I'll get to that here. Do I have that now? Yeah, I do. Okay, we'll do that right now. So unless I forget. Okay. There we go. Okay, 877-927-6648. Yeah, you can make equal cases that we're going to blow apart the lows and an equal case that we're beating out a low. And, of course, the risk-reward probably not any better one way or the other. I would say the setup pretty much has this one of two things, and that's probably up 100 points tomorrow or down, depending on how we end up on the day. But you got very light volume. You keep attacking the lows. There aren't a lot of sellers. As we said, we continue to look at that volume very closely throughout the end of the day. You have kind of a baby out with the bathwater mentality today after we tested those lows. So this is the retest, and we're not really seeing anything other than everybody just tossing in the towel. I had 3 long positions, one with an option that looks like it's going to be problematic for tomorrow. But again, options are great because you know how much you're going to lose going in, and you shouldn't have any bigger loss than if you were going to stop out in any other equity if you do it correctly. Options are to reduce risk, not put more on. Anyway, 2 out of the 3 look good to me. Or at least 2 out of the 3 are making some decent money in my equity positions. But I'm thinking longer term on those. They're not in technology. But what do we see the rest? We see, well, let's take a quick look at AMD. Oh, I was talking about Disney. I forgot to say that Disney in the next, I read some inside Hollywood stuff, not for investors, on just how many of the subscriptions at Disney for its streaming service are given away or at a significantly reduced price, where they made a deal with some of the folks through the phone providers and other things like that for streaming services if you bought a variety of things. Anyway, both Apple and Walt Disney, huge amount of massively either free or mostly cost reduced, like $5 a month, plans that are still going on. I talked to a couple people yesterday evening who both told me that they would keep getting ads for some kind of reduced price from both Apple and Walt Disney to try to get them on board, and then of course the price would go up later. But either one of those, very interesting to see the Walt Disney numbers for toys. They cut a bunch of their orders for toys as the movies just weren't successful this summer that normally lead into selling toys for Christmas. And of course, Rogue One came out, another giant stinker in the Star Wars saga 2 that has a lot of the fanboys for Star Wars just clawing their eyes out. Kind of sad to see what they did with $4 billion paid for Star Wars, and they've got one good thing to show for it, and they're working very hard to destroy that. Okay, we went through Apple, we went through Microsoft. Oh, after the bell tonight, we've got a couple things, so let's take a look at those and see if we're going to see any reversals on it. Nike is breaking through its previous 71 million share low. That was July 1st. 71 million shares. Got into that yesterday with 40 million shares. Today you got about 38 million shares. So you're going to do a little bit more. But I would be, if I was short this thing, seems more like a bet than anything else, that it's already breaking the lows and not doing that. I thought that Nike was massively overpriced up here at 177. A lot of that was they were going to sell Nikes to everybody in China. I've never believed that story. We've talked about all the other ones that have come before them. I think, is Tesla probably the only company that's gone there and hadn't lost it all in less than 6 months? I think they've made it a year. I'm just waiting for them to get nationalized. But certainly Nike, maybe a good value at this point, finally, at $70 or $77 off that high. I wouldn't want to be short this thing going into it. Fairly high short interest in it already. So they probably don't have to do well. They just don't have to do horribly. The other one out here is Micron. Another one that probably has the same thing. A lot of people short this thing. It's already been beaten down into earnings. You've got Apple throwing cold water on everything, and they've always been a Pollyanna. That's why I'm so skeptical of Apple trying to be nice to us and telling us at the lows how horrible everything is. But certainly the move down here, what do we have back here? It's not horrible. It's not great. We had about 99 million shares. You got into it with 116 yesterday. Really don't have a lot of follow-on. So I would say that if you're in the Tiger's Den, I'll be hanging around tonight to watch both of these and the reaction for both of them. Well, that is an interesting idea. Question on EQT, and I think I have some emails here. I don't know what happened to those. There they go. Okay, we'll get to those too. EQT Corporation. You tested a previous high. You did it on just about the same amount of energy, volume at the top and energy. Not the worst out here. Let's go ahead and talk about what this company does. Natural gas production company in the United States. The company produces natural gas liquids, including ethane, propane, isobutane, butane, and natural gasoline. What's unnatural gasoline if there's natural gasoline? Don't know. Don't care. We're moving on. I don't see any reason to be bearish on any energy stock whatsoever. They may have pullbacks, but just wait until you get into a pullback to get them. So I think it's long term. It's hard to believe that we don't get back up in crude to the 120 area unless something drastically changes with the policy of the United States as to production, because it's all about supply and demand. Okay, hopefully that gets that answered. Go back to the other one. Okay. Did DLG, we did. Oh, we didn't do Tesla. So we do that. Oh, we're going to the break. We'll be back in a minute. We'll look at Tesla. You got anything? I'm not hearing the audio. There we go. We'll be back in a minute.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
And somebody said something in the den, and you just keep going through, and you can't find it, and you wonder what happened and what the thread is. We can't know. Anyway, I'll have to ask the source. Question about AMD. Kind of interesting because I've been looking extremely hard at their new processors that are just out and new motherboards. Probably going to end up spending a lot of money building a new machine on this new technology. Probably not going to do it until after the first of the year, unless there's some better deals going on. But, I mean, very significant technology. You may have a lot of people that are hurting, and when you're talking about the average family spending more than $5,000 this winter to heat their homes and pay for gas than just 2 years ago. Maybe that eats into the folks that were thinking about buying a nice expensive computer for Junior to play his games on. But they do some other stuff. But certainly you've got to look at them versus Intel and just scratch your head about how far south Intel has gone and not been able to actually turn it all around. Anyway, looking at the new technology, it's expensive, and a lot of people are squawking about that, but it is also 50% faster. Sometimes, at least what I'm looking at would be replacing what I have now, which has a 16-core, 32-thread processor in it. Would be about 50% more than I paid for this one, but absolutely massively faster. No sign that you've got any kind of low on Intel. Let's go ahead and go back a little bit farther and see if there's anything here. I mean, you've blown through this left shoulder that goes from to what? The fall of 2016, I'm going to call it. And wow, you really have a low back out here of what, about 2573. So really you don't have that much farther to go to get to that low. But that may be the first level of support in that one. Got some other people going out here. OPEC meets next week. Will they decide to increase their output or cut? I would guess they would cut to drive prices through the roof. Yeah, it's yeah, you don't know about it. But yeah, my guess is as soon as the elections are over, and maybe even sooner than that, we're going to see some real movement in the price, because we're done really with the oil that we can get out of the Strategic Petroleum Reserve. And we'll be back up to 475 average a gallon, maybe by the first of the year, maybe January, unless we change and really start pushing production here in the United States. We'll be at the mercy of the kindness of strangers, which is never something you want to do. And of course, if anybody wants to start some real problems in the world, no better time to do it than when we have no fuel in reserve now. So we have become very geopolitically not averse. What would it be? Not even tolerant. I'm going to have to come up with a word for it. Anyway, not much going on there. You've got that sector doing well today in comparison to almost everything else. Is that right? Okay. So not a bad looking chart out there. Do I have it right? Is that missing? 23. Yeah, I'm missing a couple of days. Okay, let me do this. Not exactly sure why. Okay. Okay. 23rd. Yeah, missing data. Not exactly sure what's going on here. So we'll figure that out later. Okay. We looked at the SMHs. Looked at MU. Question about the TLT, we already talked about it. I mean, that's a pretty good spike down to the lows and the test of the previous low. You're within 15 cents of it. Yeah, I think that the Fed is probably going to have to do something. They're not going to drive it back up to 120, but my guess is they're going to want to let this thing go sideways for a while. So there may be some intervention why we consolidate out these big moves. Now, maybe they're not strong enough. Maybe it's the Bank of England pushing on a string where they found out literally they've lost control. But I don't see much else happening there either. So let's go back here and update this. So we're at 36.22, which was 14 points lower than that low. So we'll have to keep an eye on that. Okay, what else do we have here? Okay. Okay. Got a question about PLTR on this washout. I like these lows out here. You had a big low with about almost 500 million shares going back to May 13th. Why is that doing it? Let's do this again here. I think I got some kind of corrupt date. It didn't even like that either. Okay. Let's do this again here. What was that? We're going to the break. Let's try something else out here. Question about workday. We'll go back to that one if I can get back to it. Okay, we got the 29th. Okay. 23rd. I'm missing the 26th. Okay, let's do that. There we go. Okay. I think I have some caching issues here. Okay. See if we can't fix that during the break. Yeah, up on a bad day, work day. Again, these don't all look as bad as everybody's talking. Again, keep a close eye on the volume. We're doing 7.7 billion shares into a retest of an 18 billion share low. And just in the last few days, 11 billion shares, which is kind of the run rate we're at. So if we hang out here long enough, we can eat through, but I don't see it. We'll be back in a minute.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, getting ready to wrap up the show, we're toying around just about 22 points below the last major low. As I see it, we had 18 billion shares back then. Right now, we've got about just under, we'll call it just under 8 billion shares. Looks like we're going to come in somewhere between about 11 and 12 billion shares on the CBOE consolidated tape. So we won't really go through any higher volume in the last few days. We won't go through the last major low at this level. That does not mean that you can't get washed out for a little bit and come back into the trading range, or actually blow through this and get some volume finally. But it seems like we've hit a spot where there aren't a lot of stops left. The market's just kind of vacillating. And maybe we'll just have to hold our breath and wait for tomorrow. Again, generally you're going to see some volume come in very late in the day if everybody wants to throw the baby out with the bathwater. You've got that kind of in the semis today. But again, not as much volume in the rest of the market as we showed earlier in the show. So that's kind of it. We've got a lot of people with blood in the streets. And, of course, the old saying from France is sell on the sell on the trumpets and buy on the cannons. Well, we certainly have a lot of cannons right now. So I'm more likely to think we have at least some kind of interim bounce. Then maybe we come back down here and get the kind of volume to blow out that low. But at the moment, you don't have it. Now, if you just go sideways for a few days and keep this volume up, you can chew right through it. Sell when you can, not when you have to. We'll see you tomorrow. Bright and shiny.
Building wealth trading in the stock market seems impossible